Welcome back to our series, The Big Beautiful Bill, What It Means for Taxpayers. In this episode, number 5, we're diving into the compliance side of the new law. Now, I get it. IRS rules and audit risk don't sound exciting, but trust me, knowing what's changed in 2025 can save you time, money, and stress. Let's talk about new filing requirements, changes to audit triggers, what you need to keep on file, and how to stay compliant and confident in tax season 2025. First, who needs to file in 2025? Thanks to inflation adjustments and new standard deductions under the Big Beautiful Bill, some of the filing thresholds have shifted. For example, single filer with income below $15,750, head of household below $23,625. Married filing, jointly below $31,500. If you earned less than these amounts and don't have other tax liabilities or credits to claim, you may not need to file. But if you want refundable credits like the child tax credit or renter's credit, you should file anyway. Now let's talk about something that has a lot of people concerned, audit risk. Under the Big Beautiful Bill, the IRS has received additional funding to modernize systems and improve enforcement. SAGSURSMA is especially targeting high-income earners and complex returns. So what are some red flags in 2025? Failing to report gig income like Venmo, PayPal, or apps like Uber, large charitable deductions not matching income, round number deductions or business losses that raise eyebrows, mismatched 1099s, or missing crypto transactions. Claiming refundable credits without documentation, the IRS is using AI tools to detect anomalies. So now, more than ever, you want to keep clear records and file accurately. If you freelance, side hustle, or own a small business, listen up. In 2025, third-party payment apps are required to send 1099-Ks for any account receiving more than $600 annually. No more $20,000 threshold like before. That includes Etsy, Cash App, Zelle, in some cases, Airbnb, and more, even if it's just a side hustle or hobby income. If you receive money for services, the IRS expects to see it. Pro tip, always reconcile what the IRS sees with your own records. The good news, you don't need a filing cabinet full of paper anymore. The IRS now accepts more digital documentation, so apps that store mileage, business receipts, bank transfers, rental income logs can be used in case of audit. Keep all records for at least 3 years and 7 years if you're claiming losses or have complex investments. Here's how to stay ahead of the IRS in 2025 IRS and de farts beyond. Use trusted tax software or a professional for complex returns. Report all income, even if it's under the radar. Keep backups of digital files, double check numbers before submitting. Don't rush. File early, but accurately. And remember, filing on time is always better than filing late, even if you can't pay everything at once. Let's recap what we covered in episode 5, new filing thresholds. Audit risk is rising for sloppy or incomplete returns. More 1099s will be issued for lower dollar transactions, and digital records are your new best friend. In episode 6, we'll talk about how the Big Beautiful Bill is changing estate planning, wealth transfers, and family trusts. You are in a structure, especially for those building generational wealth. So hit that like button, subscribe, and don't forget to turn on notifications so you don't miss out. Drop your tax questions below. I'm here to help you stay ready, not surprised. Stay compliant, stay empowered, and I'll see you in the next episode.